I think the precious metal move has sucked a lot of the oxygen out of the room. So I think crypto prices aren't quite keeping up with fundamentals. But as you know, when fundamentals go up and to the right, prices eventually follow.
Crypto, how I would always say the same thing over and over and over again. I would say altcoins are not a great investment because no matter the direction of Bitcoin, they're going to go down, right? Also go down no matter the direction of Bitcoin. And then it was hard to believe in the time for a lot of people, but you zoom out so many years later and you can see that the altcoin market bled against Bitcoin. No matter the way that Bitcoin went, altcoins just continued to bleed against Bitcoin. Now, stocks will likely bleed to gold no matter the direction of gold. If gold goes up, stocks bleed. If gold goes down, stocks bleed against gold. That doesn't mean stocks can go up on their USD pairs. It just means they're likely going to be bleeding against gold. That is the regime that we are in.
Tom Lee begins by addressing the explosive performance in metals, particularly gold and silver. For years, precious metals were often viewed as a niche asset class, something owned primarily by gold bugs, or investors permanently skeptical of fiat currencies. But according to Lee, that perception has fundamentally changed. Over the last 3 years, metals have proven themselves as a legitimate, durable asset class. Before we go on, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this. Every action helps with the YouTube algorithm and greatly supports the channel's growth. Thanks for your support and enjoy the video.
Been going on in the metals because a lot of people are pointing to this and saying the dollar's collapsing and metals are soaring, and should they feel good about owning stocks in this environment, or you hold your nose? I mean, like, can you kind of just unpack for us what you think is going on here?
Yeah, I mean, I think metals is proving to be a real genuine asset class, because I think for many years maybe people thought only gold bugs should own gold, but now, especially the last 3 years, metals have, I think, proven to be a bit of a juggernaut. And it's hard to tell how much of it is geopolitical uncertainty, dollar and currency weakness versus dovish central banks. But maybe if it's all three, that explains why gold's done so well. I don't think that those are bad for equities, because if this is anticipating dollar weakness or more dovish moves by central banks, then it's good for asset prices. So I almost think the gold move could be sort of a glimpse into sort of risk appetite growing for stocks.
As a result of things like dollar weakness and everything else, right? This idea that you go into more riskier assets or ones that are diversified away from there. If you're going to look at that, though, with the dollar weakness intact, Kelly also mentioned the Mag 7 stocks and the slew of earnings we've got coming up. Weaker dollar has typically in the past, from a conventional wisdom standpoint, meant better for large multinational companies. It helps their overall revenue profile, especially outside the U.S. Is that still something that we want to look towards as a true tailwind for this market, other than just saying maybe risk assets are in vogue and we just want to play the AI trade ad nauseum for the rest of this year?
Yeah, I mean, in some ways, I think one of the big sort of real stories this year is earnings growth is accelerating. And that was because of onshoring, the tariff headwinds disappearing. But now if we have dollar weakness, I think it puts more upside to the earnings story. Investors aren't necessarily paying for that right now because multiples have been compressing, but I think it really helps anchor stocks. So between now and the end of the year, I think there can be a lot of reasons for speed bumps, but I think as we exit the year, the earnings story is anchoring, I'd say, upside to our 7,700 target.
Yeah, which is, I mean, we're starting to look at, we've seen one round number after another falling for gold and the likes, and you wonder if we're finally going to get back to talking about S&P 7,000 and Dow 50K and all of that. But so you're not worried there's going to be, kind of landmines hiding in the earnings reports or anything like that? Does the government shutdown matter? I mean, we just had one at the end of the year, and yet here we are with equities.
Yeah. In the short term, of course, shutdowns create uncertainty, and we just, like as you said, went through the longest one. Those have all proven to be buying opportunities, but it's hard to ignore the fact that gold and silver are like sucking oxygen out of everything.
Yes.
Right.
Yeah. So what do you do with? I mean, Carter Worth, for what it's worth, I want to know what all the technicians, what everyone thinks about this. He's now put out a note and saying sell all of it, the silver, right? Just sell all of it. I mean, it's up 15%
It's parabolic.
today.
It's parabolic.
Yeah,
and it's just in the last 2 to 3 months.
Yeah.
Yeah, and as you know, like when you look at extensions like this, it's dangerous to fade it because you don't know how long it will go. But you're right, a parabolic move Holly marks the end of the move, not the beginning of the move. So it's a good question of like timing, but it sure seems like commodities, especially precious metals, needs to have a place in people's portfolios.
If you look at the way that the earnings story is going to shape up, since you brought it up, if we want to look towards this season, we've kind of established the fact that we're maybe in this transition phase. This earnings season is going to be important, but maybe not as important given the future macro tailwinds that the market may have. In your mind, are there certain key parts of the market that you should be more exposed to? You had in the past talked about banks and financials being there. We saw the run last year, and since the earnings season has started, those banks have kind of sold the news, so to speak. So are the banks still one of those places you want to be?
Yeah. From Fundstrat's perspective, when we did our outlook, our top sector picks this year would be energy and basic materials, and that was from early December. We still like the Mag 7 and financials and industrials and small caps. I think the financials are being buffeted because the White House is choosing winners and losers, and right now they want to reduce the burden on consumers by potentially capping credit card rates and maybe making it harder for institutional buying of homes. So I think this is hurting the banks to an extent, but the bank fundamentals are so good, and I think tokenization and sort of blockchain are really big productivity drivers, and AI is a huge tailwind that I think banks are in the process of re-rating more like tech stocks over time. So, I mean, I would use any of the weakness to buy them.
Just sort of explain or unpack this for us. What crypto continues to experience, because we talked about this before, the October 10th reset and all of that. I don't know if that applies to Ether and kind of where it goes from here.
I think we're still feeling the ripple effects because on October 10th, there was a massive deleveraging. It crippled many of the key players in the industry, some exchanges and market makers. And so the industry is sort of limping along, but the fundamentals have improved a lot. And I think even Davos really amplified that Wall Street is now starting to view traditional finance and tokenization and blockchains as one business that's converging. And it's not just Larry Fink, but it's the UBS CEO, Standard Chartered CEO, Euroclear, really Wall Street sort of is on board. I think the precious metal move has sucked a lot of the oxygen out of the room. So I think crypto prices aren't quite keeping up with fundamentals. But as you know, when fundamentals go up and to the right, prices eventually follow.
Does that, though, mean that there is a certain degree of relative cannibalism between regular gold and digital gold, so to speak? I'm just using that as a kind of a metaphor and analogy right now. But if you're saying that the move up in silver and gold is kind of drawing a lot of that money or interest away from digital gold and digital silver, so to speak, does that then mean that the investor bases that they share is growing? And so they make that distinction from an allocation perspective.
Yeah, and I think part of it is mechanical. Like, when gold and silver rise, and let's say folks are using margin or options, then they're using capacity that could be used to buy other risk assets, whether it's Mag 7 or cryptocurrencies. But because crypto inherently has delevered, then that's going to be felt more in the crypto space. So I think crypto, which should be going up on like weaker dollar, easing Fed, it doesn't have the leverage sort of tailwind because the industry delevered. And as long as gold and silver are rising, then there's a FOMO into buying that instead of crypto. But of course, that is just a leading indicator, right? Because when gold and silver take a break, then, and in the past, that would lead to a Bitcoin and Ethereum surge afterwards.
Tom Lee argues that there is short-term cannibalization between physical gold and digital gold. When gold and silver surge, they absorb capital and investor attention, especially in a post-deleveraging crypto market, temporarily holding back Bitcoin and Ethereum despite supportive macro conditions. Historically, though, metals tend to lead, and when they pause, crypto often follows with strong rallies. Benjamin Cowen reinforces this by reminding investors to look beyond dollar prices and focus on relative valuation, where comparing assets against each other reveals capital rotation long before it shows up in USD terms.
Gold has now broken out against the stock market. Gold on the USD pair is continuing to go higher. 4,900, currently 4,922. Obviously, 5K is a big round number. We have seen things struggle at these levels. We saw Tesla struggle to break through 500. We saw Ethereum struggle to break through 5,000. Hopefully gold can break through. But here's the bigger chart. The bigger chart to watch is not the USD valuation. It is the valuation against the stock market. And the reason for that is because if you have cash, you want to figure out where to put it. Obviously, things will get corrections, right? Like I've said before, I expect a top sometime in the first half of this year, followed by a low late Q3, early Q4 by metals. That seems reasonable. But what's more interesting is what's going on the S&P valuation, because gold is breaking out against the S&P 500. Now, I've already shown this chart in other ways. We've looked at it the reverse, where you look at the S&P divided by gold, and you can see that it looks like it is starting to break down here. Is it a fake out? I guess we'll find out, but to me, it's really starting to look like gold is breaking out against the stock market and that the stock market is breaking down against gold. This pattern is a pattern we have seen. We've seen it play out over so many different charts, and I think it's probably going to play out again. The first chart being, we saw this first on Bitcoin dominance many years ago. We're going to work it in. Who would I be if I didn't? Right? Where Bitcoin dominance eventually broke higher, got a correction, continued to run. We saw it with HSI, the Chinese markets. We saw the same thing play out over there, where you had these highs, eventually it broke through, got a correction, continued to run. You even see it on USDT dominance plus USDC dominance, right? And maybe I should look at it on the weekly time frame so you can at least see a little bit clearer. But you basically have the highs, it eventually breaks out, drops, and then continues to run. Where else did we see it? I'm glad you asked. We saw it on Palladium. Palladium, similar idea, right? Set some highs, break through, pull back, continue to run. Gold versus the S&P. It already got a big pullback not too long ago, and now it's breaking through. So, it looks like things are changing. The structure is shifting. Will gold have a correction? Absolutely. At some point, it will. Most likely, it'll probably start before Q3 gets here, and I'm guessing it'll find a low in Q3, Q4. But here's the thing. Do you guys remember with crypto, how I would always say the same thing over and over and over again? I would say altcoins are not a great investment because no matter the direction of Bitcoin, they're going to go down, right? Also go down no matter the direction of Bitcoin. And then it was hard to believe in the time for a lot of people, but you zoom out so many years later, and you can see that the altcoin market bled against Bitcoin. No matter the way that Bitcoin went, altcoins just continued to bleed against Bitcoin. Now, I say the same thing, but with respect to gold, right? Stocks will likely bleed to gold no matter the direction of gold. If gold goes up, stocks bleed. If gold goes down, stocks bleed against gold. That doesn't mean stocks can go up on their USD pairs. It just means they're likely going to be bleeding against gold. That is the regime that we are in, right? So when you look at gold divided by the S&P, you can see it's breaking out. I'm sure there's going to be a pullback at some point, but as I said before, who cares, right? Who cares? Yes, it will. But if you want to be invested somewhere, gold continues to outperform a lot of the other investments. And again, you don't have to hate an asset class just because it hasn't done well in prior years. It's okay to pivot, right? And I say this month after month, year after year. I said back in 2022, I was pivoting away from altcoins. And what's crazy is if you look at the valuation of altcoins against gold, they're about to put in a new low from where they bottomed in 2023. They're about to put in a new low. Guess what? Against silver, they already did put in a new low.
Together, Tom Lee and Benjamin Cowan highlight a clear regime shift. Capital is prioritizing relative value over headline price gains. Gold is leading this rotation, not signaling panic, while stocks and crypto lag on a relative basis. History suggests metals move first, and once that leadership pauses, higher beta assets tend to follow.